Hi guys, and welcome back to CashBright, your guide to investing in an ever-increasingly uncertain financial world. The MCRB stock has just exploded by rising more than 600% in price, from around $4.66 on the 7th of August to just over $31 on the 10th of August. The stock eventually closed the day at around $22 a share. So what on earth has caused such a massive price jump in this stock, and is it one to buy? Well, the jump has been attributed to positive results emerging from the company's phase 3 trial of its SER-109 treatment for recurrent C. difficile infections. The trial showed a statistically significant 30.2% decrease in the proportion of patients who experienced a recurrence of C. diff infections, and 88.9% of patients demonstrated sustained clinical responses. Now, if the treatment can obtain regulatory approval and come to market, the company will stand to make a lot of money, hence the sudden upswing in investor interest. So what the hell is C. diff, and why does it matter? Well, C. diff is essentially a bacteria that, if you are unlucky to catch, can cause life-threatening diarrhea and is often the side effect of taking antibiotics. This nasty little bacteria is currently the leading cause of hospital-acquired infections in the US, with 12,800 deaths reported for 2017. The company's latest results show that this treatment can effectively treat the disease, and it exceeds the FDA's threshold for obtaining permission to market the drug in the US. Now, from an investor perspective, the question is whether this price rise represents just a market reflex or the beginning of an upward trend. Well, I think you'll agree with me that the market is pretty jumpy these days, with so many day traders and price speculators making analysts feel like that they are chasing their own tail by trying to explain why the market has been moving against the fundamentals of the economy. Looking more closely at Ceres, its EPS is a loss-making negative $1.07, and the 12-month consensus price target is just $8.08, substantially lower than the current market price. So, on paper, this would suggest that the stock is overvalued, and indeed, even at phase 3, there is still a long way to go before the company will be able to turn a profit on this new treatment. Having said that, many analysts agree that the stock has good prospects and is likely to see further rises in value in the future. Now, this is not based on the current picture of the company's balance sheet, of course, but rather the potential picture based on the massive need for an effective treatment for C. diff in the US and around the world. So for me, I therefore believe that on balance, this stock is one to buy. The FDA is likely to grant the company approval in the near future for this treatment, and with a 30% absolute reduction in the rate of C. diff, it's a good bet that hospitals around the country will be strongly demanding this drug when it comes to market. I believe that this recent price rise is just the beginning, and therefore, now is the time to buy in order to avoid missing out. Thanks for watching. If you found this video to be helpful, please leave a like, and don't forget to hit the subscribe button. And until the next time, stay sharp, stay hungry, and stay cash bright.